Well, it looks like our markets are turning a little bit. We got Dow's down about 190 and S&P's down 2 points now. Nasdaq's up 110. So what a crazy, crazy week this has been.
Yes, Mark, it has been a crazy week of earnings, some surprises. Microsoft did well, Google missed on cloud, and Meta said the bad word of soft potential when it comes to growth and earnings in the coming quarter. Welcome to the Best of US's Platinum Channel Weekly Review. This is where we go over a bunch of the different swing trading trades that were on the watch list, horizons list, and below the 200-day moving list. If you're not a subscriber to the Platinum Channel, I recommend you subscribe today. You get a whole lot of good stuff and you get commentary. Every Friday we do a video call with Mark and the crew, and we talk about the markets, we talk about the existing conditions, along with the different swing trading portfolios and how they performed for the week. So let's get going. Mark, from a swing trading point of view, how is this market any different than the bull markets we've seen in the past? How do we handle this?
And then, of course, under the 200, I've got 8 million things under the 200, but then you've got to find the patterns, that fit the trading guidelines. So
Platinum member Paul killed it on the CHD trade. Super quick, super in and out. Let's hear the commentary from Mark and Paul.
So you did good. Here we are, Paul. So again, I said I wasn't going to do anything because it's Friday, but you can see here was yesterday, and we closed 2 days ago above the 200 and then retested it yesterday. And so that's why I put it on the list for, I forgot what I said, those with basically more waivos than I have, if you wanted to try it. And you can see it's been the 200 would act as support, and then you have the 50 at resistance, which we've hit the last 2 days. And so I guess, Paul, with your play-by-play, you must have hit it right about when it came down to the 200. And then caught it on when it wicked back up, huh?
At a limit going in,
Yeah.
but it opened at that low.
Yep.
So it caught the limit, and then right away I put the stop losses and the gains.
Yeah, you really,
Yeah.
in this market, you got to really be tight and fast on if you get in, be ready to get out. And you can see what's happened. It's now dropped down, basically past the 9, and right here is where you have some buys. You can see it tapped on that, and that's where it's at right now.
This has been a big week for earnings. We're going to hit upon Microsoft. Let's hear what Mark says about Microsoft and how it performed after its surprise positive earnings.
So the other things that have been happening this week are earnings, and we had some big earnings, especially three of the Mag 7, and we'll go take a look at some of the charts here. And we'll start with Microsoft. Microsoft came out and it gapped way up, and we're off to the races.
Yep.
So here we were, before earnings, we're just kind of going in a sideways pattern. Earnings comes out, gap wide up, and whoever bought up here is probably not happy right now, because the next day, boom, and here we tried again to get up, and you can see it wicked up, and the bears jumped in there and just pushed it right back down to the 9-day moving average. If we come down, we're seeing some weakness in the MACD. They already have a crossover in stochastic and a little bit of a bump up above 50 in the momentum, and that was probably because of this wick. But we're sitting right on top of what is the intermediate resistance level, and then right above the 20 and right above the 50. So we'll see if this continues to move sideways, being it's Microsoft. But you can see, again, I try to get out before earnings if I was in Microsoft, and then everyone would have said, well, you're kind of an idiot. And then yesterday they would have said, oh, you were smart. And then today they'd say, well, you're kind of an idiot. But, I'm out.
It is amazing to me how a couple of words can change the total direction of a stock after markets when it reports earnings. Meta was up after it reported because it had positive earnings, positive revenue growth, positive everything. And then it came to the earnings call where the CFO was asked how the Middle East was going to affect how Facebook was going to do in the near future. And she used the word soft. Let's see what Mark says about the charts.
And here's their earnings. You see what happened to Meta. They gapped down a bit, came down, and right here, again, on my program, I can see where sells and buys are. And this is where the buys were at. And you can see it wicked down, hit the buys, came back up today. Again, here's the intermediate resistance line, which can become support. There was support when I got up here. Right now, we're having trouble getting over, but you can see the channel is down. Here's our channel. And it just keeps going between the top level of the channel and now back down. And now we're back to the center. When we come down to the MACD, it looks sad. The stochastic is sad, and a little bit of a bump in the RSI because we're up a little today. But, none of this looks good to me, even though, it's Meta. We'll see what happens. We'll see if by the dip comes back in and saves it. But we're seeing weakness in the Mag 7.
Unlike Microsoft, Google came out with earnings, but they reported soft earnings on their cloud services. Cloud services is what other businesses subscribe to, and what we're seeing now is small businesses throughout the United States and the world are now slowing, and that represents in Google's cloud services earnings, where they missed on their earnings per share growth or earnings growth and revenue growth.
Movement at some point, but today we're not seeing it. Okay, I've got a 9-day simple moving average that's diving. I got a 20 that's diving. So these are your short-term moving averages, and just price action down. And again, this looks like Meta as far as the oscillators right now. So again, another breakdown.
This coming week, Apple reports. It is the largest market cap stock. It is in every index. It's in the S&P 500, the NASDAQ. It's in the Dow Jones Industrial Average. It's in every ETF that represents large cap growth. And most large cap growth funds hold a big chunk of Apple. If Apple comes out with weak earnings, comes out with soft guidance going into this fourth quarter and into next year, you could see potentially a massive sell-off in Apple, which, because of how much it represents from a market capitalization standpoint of the S&P 500, you could see a drawdown on the S&P in a big way. Apple, Microsoft, these are key stocks in these indexes. And with Apple coming up, this could be a little bit, upsetting. And let's get into what Mark says about Apple's chart and what he thinks the perspective of Apple's direction in the coming week is.
In China, Huawei was doing better sales than Apple for phones now. So it seems like the Chinese are moving away from Apple.
Yeah.
And I don't know how much. I don't get into the fundamentals of Apple.
I think that the Chinese government said that no employee of the Chinese government can use an Apple phone, so they're making them change brands.
Yeah, they the CEO of T-Mobile, I believe, he said basically they're not seeing the traditional upgrade from, like the iPhone 14 to the 15. They're not seeing that happening this time with Apple. And if you think about it, it's like most people are right now, they're just trying to make their credit card payments. Everybody is screaming about how S&P is up, the NASDAQ's up. But if you look at the S&P 500, it's a market cap weighted index, meaning depending on the size of the company, when it comes to market capitalization, they get allocated more of a percentage of the S&P 500. But Mark points out, if you look at the equal weighted S&P 500 index, equal weighted, meaning everybody gets an equal amount of percentage allocated to that stock, you will take a look at and go, wow, the S&P 500 overall, minus the Magnificent Seven, is actually headed down. Let's check out the chart with Mark.
EW. So this is really a good view of what we're seeing in the S&P. So if you took out and everyone was an equal weight, and you took, and Microsoft's the same weight as everything else, and Apple's the same weight, we went under the 200 back in September 20th on the equal weight S&P. You can see the trend has been down since September. And we're continuing on down. We're continuing right following that Bollinger Band, run underneath the 200, run underneath all the moving averages. We continue to sink on the MACD. So that's the importance that those 7 stocks have had on the market this year. And now they're starting to weaken and breaking down according to the charts. Now they can turn around. Definitely they can. You know how news is, and buy the dippers can come back in. But right now the charts aren't telling me that.
In closing, Best of U.S. Investors Platinum Channel is here to make you a better risk manager. We are in an environment where everything is starting to slow. Businesses are slowing. Individuals, residents are slow. Residential sales is slowing. Yeah, housing prices are starting to come down because the cost to finance a home. There is a lot of stuff going on in the economy, and this is where you've got to become a better risk manager. I made a quote at the end of the Kerry's weekly video call, and I read off something that I found very interesting. For if you're 55 years old, for every 1% drawdown in your portfolio, or let's just use the S&P 500, you're adding 3.6 months to your retirement date. So let's say you're 55, you're retiring at 65. If you see a 1% drawdown and you only allocate to the S&P 500 in your 401k, you're adding 3.6 months to that retirement date. As of 7/28 to from July 28th to October 27th, we've seen in the S&P 500 a 12% reduction in that price. Do you know how many years you just added to your potential retirement date? You added 4.32 years. That means if you planning to retire at 65 and you are 55 years old today, and all you invest in is the S&P 500, you are projected to have to retire now at 69 and a third years. That's 4+ years past what you thought it would be. This is where you got to risk manage. You have to really start paying attention, because we are now in a bigger bubble. We're in a big tech bubble. We're in a housing bubble. We're in a bunch of bubbles. And right now those bubbles are getting ready, potentially to burst. And if you're not properly risk managing, you could be setting your retirement date back way far from now. And that's why you need to get on board with risk management. That's why you need to subscribe to the Platinum Channel at Best of U.S. Investors. That's www.bestofusinvestors.com. Check it out. Have a great week and be safe. Live loud.